Now friends, let me start with the discussion with respect to the investment trust. Okay, see here the provisions are that way pretty simple and very straightforward kind of situation. Understand the hardcore fundamentals and thereafter we'll go into the details. Okay, so investment fund or investment trust. Okay, so I'll just say the investment trust. Okay, it can also be called as the investment fund. Okay, and unit holder. Unit holder basically the investor in this particular trust. Okay, now if logically I'm just telling you that if the investment trust is chargeable to tax for a type of income, then the unit holder will not be chargeable to tax for the same type of income, and vice versa. If the investment trust is given exemption with respect to a kind of incomes, then unit holder will become taxable. Okay, so basically the law says that if there is any business income, okay, then investment trust will be taxable, okay, for the business income, and the unit holder will become exempt. Okay, so investment trust will be taxable for the business income, and unit holder will be eligible for the exemption for the proportionate figure, naturally, because to the extent of its proportion. Okay, if you have any other incomes, then investment trust is given a full exemption. Other income is not other sources. Any income other than the business income, maybe capital gains, other source income, whatever, okay, will be given an exemption in the hands of the investment trust, and the unit holder will be taxable. Of course, everything will be to the proportionate figure to that extent. That means if you are a 1/10 unit holder, then 1/10 of your proportionate share. Okay, and the nature of income, whatever is in the hands of the investment trust will remain the same as in the hands of the unit holder. Okay, next thing is that investment trust, if there is any figure which is taxable, okay, if there is any figure which is taxable, then what rate of tax that will be applicable? Okay, so if you are a firm or if you are a company, that means if the investment trust, the entity is in nature of a firm or a company, then such rate will be applicable. Okay, so that respective rate will be applicable. Otherwise, it will be taxable as per maximum marginal rates of taxes. That is a tax liability calculation with respect to the investment trust. Okay. However, when it comes to the unit holder will be taxable for the respective income, respective rate, whatever the assessee is, that assessee will be eligible for the tax rate and the tax liability as per your normal calculations. Okay. Now, with respect to this, you understand this particular provision 1023 FBA provisions, income of investment fund other than business and profession. Okay, that means each and every income of the investment fund is exempt other than business income. That means business income will become taxable. That is first part of the provision. 1023 FBB, it refers to exemption with respect to the unit holder, which is referred to under 115 UB provisions, because there are some that tax rate and all that provisions of the investment fund is with respect to section 115 UB for the unit holder, because 1023 FBB is with respect to the unit holder. Okay, that of course the proportionate figure. So this particular unit holder is given an exemption with respect to the proportionate business income of that particular fund. Okay, so this is, when you read both these provisions together, it makes it very clear that business income is taxable in the hands of the fund, and the same proportionate figure will be exempt in the hands of the unit holder. Okay, that's very simple and very straightforward. Now, one or two extra points which I would like to bring to your notice is the rates of tax for that particular fund. So, income of the investment fund, if it is a company or a firm, then such rate of tax will be applicable, and in any other case it will be taxable as per maximum marginal rates of taxes. Okay, so this is a tax liability working of the investment fund if that comes in the examination condition. Accordingly, you have to multiply the tax rates. Okay, and thereafter there is some carry forward set of mechanism here, and that particular carry forward mechanism is again practically very simple and logical, that since business income treatment is in the hands of the fund, the carry forward setup will also be done by the fund with respect to business income, because it is taxable in the hands of the fund. Okay, and any other losses, it will be passed on to the unit holder, because its tax burden, its tax consequence is passed on. It is also called as a pass-through status. It is passed on in the hands of the unit holder. Okay, so that's a very simple. So if there is any such losses, okay, business income, that means business loss, allowed to be carried forward, set off in the hands of the investment fund. As simple as that. And any other losses will be ignored. The reason is very simple, that the business income tax treatment is given in the hands of the fund. So this is a obvious clarification. Now, if there is supposing capital loss, then capital loss will be proportionately passed on to the unit holder. So unit holder will take the advantage of that particular losses. But that condition will be only if you are holding a unit for at least period of 12 months. Now this is one of the very, very key point. Okay. So any losses other than referred to in subclause 1, okay, that is basically other than your business losses, you will have to apply the test of holding specifically for the advantage with respect to losses, okay, set off of losses. So unit holding condition to the extent of 12 months is brought onto the statute record. Okay, and naturally, this is one, what should I say, a practical condition. So if you are holding unit for more than 12 months, then you get the loss advantage. Otherwise, you do not get the loss advantage. Then, of course, to that extent, the fund will have to ignore that particular provisions. Okay. Now, once you have understood this much, then you will be capable of answering the questions very, very easily in this particular situation. Okay. Now, come to this particular question. Understand the question, and thereafter we'll discuss the answer also. Okay. Now the following are the particulars of the 3 separate investment funds. So you have A, B, and C. Okay, 3 separate investment funds you have. You have a business income, you have capital gains, you have other sources. Okay. So whatever is the tax treatment with respect to the business incomes, that will be in the hands of the, what should I say, the fund. Okay. So understand how I will approach to this. Okay. First of all, I will discuss the investment fund. Okay. The tax treatment of the investment fund. So these 2 legs will be, tax treatment will be in the hands of the fund. These 20 legs treatment will be in the hands of the fund. Okay. But now what will happen is, see very, very carefully, you also have income from other sources. Okay. This is your income. Business is a loss with respect to fund C, but you also have this particular 8 lakhs as my other source income. So normally I can do this particular set of. Okay. So the carry forward of the business loss, I repeat, the carry forward of the business loss, but which amount? Which will be the net figure, which has to be carried forward. Okay. So in the hands of the fund, treatment of the business income will be there, but in case of losses, the set off benefit will also be in the hands of the fund. That means if there is any business loss to be done, the set off will also be in the hands of the fund itself. Okay. So in case of C, there will be a -12 of loss, business loss, which will be carried forward. Okay. But these will be carried forward in the hands of the fund. Okay. However, when it comes to the other losses, for example, these loss, okay, of capital gains, this will be passed through. This will be passed through the unit holder. Okay, so that's the ultimate tax treatment in this particular situation. Okay, one of the point that I would probably bring it to your notice here is this. Okay, see, if there is any loss under any head of income which cannot be wholly set off against income under the head, okay, of the said previous year, then, so which losses? Only that losses which has to be carried forward. That means if there is any set off adjustment, the set off adjustment will be done in the hands of the fund itself. Okay, so it clearly makes it very clear that which is not wholly set off, not wholly set off, then what is to be carried forward? It will be carried forward in the hands of the fund. Okay, so if you see this particular income, now see ultimately, okay, how much will be the income of the respective fund? Okay, in case of A, there is no business income, so it will be nil. I am just talking about investment fund. Okay, so income will be nil. Okay, naturally capital gains and these 2 figure will be passed through. Pass through means the proportionate figure will be going to the respective unit holder. Okay, in case of fund B, the income will be 2 lakhs, so this will be the business income. Okay, that 2 lakhs will be eligible for the purpose of taxation in the hands of the fund. Okay, and in case of C, okay, see there is a business loss first of all minus 12 which will be carried forward. Okay, that will be with respect to fund C. Okay, and whatever is the capital gains, that will be passed through. This will be passed through. Okay, and ultimate income is going to be nil. That means net taxable income is going to be nil in case of fund, because after all the net is a business loss which is to be carried forward. That's all. Okay, and what will be the rate of tax? Now see, this particular investment fund, it is not given to me whether it is a firm, company, or someone else. So what sort of a entity in which this particular fund is? Okay, so if you assume that this is others, then it will be MMR, rate of tax. Okay, and if it is a firm, then firm's rate of tax. If it is a company, then the company's rate of tax. So depending on the situation, the tax liability will have to be decided. Okay, now that's all with respect to the investment fund. Okay, so far compute the total income of the investment fund and the unit holders. Now you have to do the unit holder computation. Now each investment fund has a 20 unit holder having 1 unit, so you can say 1 by 20 for all the unit holders. Income from investment fund is the only income of the unit holder. Okay, so that's fair enough. That means unit holder does not have any other income. Now in case of fund A, okay, see, capital gains 1 by 20 because 20 unit holder, and 1 by 20. Okay, that much will be the income of the respective unit holder. So if it is 16 lakhs, then 1 by 20 means 80,000, and 4 lakhs 1 by 20 means 20,000 with respect to unit holders of fund A. Okay, now 1 by 20 of 14 lakhs for fund B, and 1 by 20 of 4 lakhs of fund B. That will be the income of the respective unit holder because it is 1 by 20. Okay, now with respect to fund C, 1 by 20 of capital loss. Now that is a loss. Okay, so that much of loss will be passed on to the respective unit holder. Okay, so 6 lakhs divided by 120 means 30,000. 30,000 losses will be passed on to the unit holder. But for this loss, there is a condition. Okay, that this unit holder, okay, should be holding the unit at least period of 12 months because that's a loss. So that data is not given, that this each unit holder is holding unit for more than 12 months or less than 12 months. So for that, if you want to write an assumption, I assume that all the unit holder of the fund C is holding the fund units since long than 12 months, and that's the reason the loss can be passed through that unit holder. Okay, however, if the unit holder is not holding up to 12 months, that means supposing they are holding just 2-3 months, for example, then that much of loss will be ignored. That means neither the fund will be able to take the advantage of that particular loss set off, nor the unit holder, because it has to be ignored and ignored forever. Okay, so that is the answer with respect to a particular year. Okay, so that's it. Now investment fund C, now in the second year, that means in the next year it has the following total income. Okay, so investment fund C, you have some extra data. Okay, now business income is how much? 2 lakhs. We already had a carried forward loss. Okay, so out of that 12 lakhs of carried forward, these 2 lakhs will get set off, so there will be no such business income. Carried forward set off will be completed. Okay, and capital gains will be the income from other source will be the income. So in the next year, these two will be the income which will be of course exempt in the hands of the fund. That means its treatment you have to decide in the hands of the fund. Okay, and this particular figure will be exempt in the hands of the fund, and this particular figure will become taxable in the hands of the unit holder. So your unit holder is 1/20th, so make it 120 and 120, the respective share in the respective unit holders' hands. That's all. Finish.